Yes guys, what's going on? So we're about to start on the chart. As you know, we're going to go through the whole week, back testing our trades, and we're going to see what the end result is. And this is our way of just analysing, going over what's happened, and preparing ourselves for the following week that is about to begin. We've got the New York local time 2 AM here, and the reason why this is marked out is because from 2 AM to 3 AM New York local time is where I scout out my London buy side and sell side liquidity. And then from 6 PM to 10 PM New York local time, that is where I find my Asia high and my Asia low. So I'm just going to demonstrate to you guys what that looks like. Right here we have our Asia low, so we can point that out, and then we also have our Asia high right here. We use this for the 5-minute time frame. I find this is the best time frame to find your liquidity levels, the highs, the lows. And now from 2 AM to what is now 3 AM, our buy side liquidity, that is our London buy side. And then our sell side liquidity. Now we're going to move to our 1-minute time frame. We want one of these to be swept out, okay? See right there, that's been swept out. But this has been taken out, the high's been taken out. I have new buy side which is formed. We have price coming down, and right here you can see we have a fair value gap. Fibonacci retracement tool, best position to take. Fair value gap 50%. Now also have our change of character, and the gap's been filled. Now we're going to put our stop just above the Asia high, and then we're going to have our take profit and the Asia low. So right there instantly we've been stopped out. And that's just how it is. That is the setup we've taken. That is in the plan completely, and we're just going to accept it. Okay. Right here we're going to have our trades won, our trades lost, and then we're going to have our overall win rate. The Asia low has already been taken out. We have the Asia high at a really high range. We're going to mark out our London buy side and sell side. So right here we have our London sell side. Top of this high, we have the London buy side. Now we're quite simply going to switch to the 1-minute time frame. And what we're going to do, we're going to, from 3 o'clock to 4 o'clock, we are looking for our entry. So one of these needs to be swept out, our London sell side as well. Change of character, which is our market structure shift. None of these gaps are really correlating with the Fibonacci, and price does appear to be downtrending here. You can see we have a bearish downtrend. All the high time frames are telling me that this is moving bearish, so we're not going to be taking this trade. Price is completely shot towards the downside. As you guys will know now, we mark out the Asia high and the Asia low. There's our Asia high, we have our Asia low. Here is our London buy side, just to form our London sell side. So you can see here, I'm pretty sure this was a news drop. So now what we want to do is, Asia low has been taken out. London sell side is now at the bottom of this wick, and price is respecting the buy side. Numerous fair value gaps forming. So now this is where we get our retracement tool. Identify the best fair value gap. There's a gap right here, but this is not correlating at all. One gap here, 2 gaps here. So we're going to put this here. Now we're going to wait for our retracement back into the fair value gap. So there you have is our retracement into the fair value gap, 50%. And because of spreads, this is going to drag it down quite annoyingly. We're going to put our stop loss above the high, not past the candle close, not above this high, above the actual liquidity level. We're going to be targeting the London sell side, but there is no Asia low below this. The Asia low has been taken out. Down as one win. And we're marking out our Asia high and Asia low. Asia high. Our London buy side and sell side yet again. Right here we have clear buy side and clear sell side at the bottom of this low. Now we're going to switch back to our 1-minute time frame as we come to the start of the session, the kill zone, in other words. The buy side has been taken out. We're going to move this to here. We formed this high. Now we need to see our fair value gap forming. Taking it out yet again. The Asia high has now been taken out, and now this becomes our next level of buy side liquidity. And now we're coming back down again. We want to look for that fair value gap. Now we have 2 fair value gaps we can see right here, but obviously using the Fibonacci tool, we're going to identify which is the best one to be taken in this situation. The best area to be taking this here is halfway in this candle. And the reason for this is that if it goes up here, there is a chance it can come to this fair value gap and we can miss the move. Down here, this is just way too low, and that would mean that we're risking less. So halfway through, it just seems like the best move for this situation. And retracement, so there we have it, retracement 50%. Because of spreads, this will move us down to there. We're going to target the Asia low and put our stop loss just above a London buy side. So instantly right there, that was a killer. 2 trades 1, have our Asia high sitting up here. So there is our London buy side, top of that high, and then we're looking for the sell side to be formed. So right there is our sell side at the bottom of this wick. So the sell side has been swept out, and it just appears to me that we have a continuous sell-off, and we hit 4 o'clock and there are no trades to be taken here. Price just continues to sell off. We are not interested for an entry right here. If I got in on a sell here, yeah, at any point price could reverse, and what is my entry based off? Literally just hope that this is going to go to the downside and that I'm going to make money because it's moving down. Just direction of price, which is just, you know, beginner level shit. It still happens, so you just got to keep that discipline. 2 winners, 1 loss will equate to a 50% win rate, and that is actually quite good considering that it's only 1 loss, 2 winners. Those winners are going to be bigger than the loss, so that will equate to us leading us in profit. Over trading, you know, trading the PM as well. Now, if I lose in the AM, then I'm very likely to force a trade in the PM. Do you know what I'm saying?